You might have clicked on this video because the image of the Senate chamber emptying out while the president spoke felt vindicating, or maybe just shocking to you. It is easy to get caught up in the theater of it all. We see the empty chairs, the awkward silence, the confusion on the face of the most powerful man in the world, and we process it as a moment of personal humiliation for Donald Trump. But I want you to pause and look deeper than the drama. What you are actually witnessing is not just a political stunt or a clash of personalities. It is a structural collapse. It is the moment when the machinery of the American government, the very system that underwrites the value of the dollar in your pocket and the stability of the contract for your home, signals that it is no longer functioning. When the legislative branch physically abandons the executive branch, we are no longer talking about partisan gridlock. We are talking about a fundamental breach in the management of the capitalist state. And while the pundits on the news are going to talk about who insulted who, I want to talk about what this means for the economy, for the markets, and most importantly, for you. Because when the people running the ship stop talking to each other, it is usually the passengers in steerage who end up paying the price. Let us be clear about what officially happened today. As you saw in the clip circulating everywhere, the president began his address, likely expecting the usual mix of applause and performative booing. Instead, he got silence. Then he got movement. Senators from both parties, seemingly in a coordinated action, stood up and walked out. This was not just the opposition party making a statement. This included members of his own coalition, the very people who usually act as the guardrails for his policy agenda. They turned their backs and left him speaking to a room of wood and velvet. This is unprecedented in modern American history. We have seen heckling. We have seen boycotts by small groups. We have never seen a near-total abandonment of the chamber during a presidential address. The official statements will cite disrespect or specific policy grievances. But in economic terms, this is a vote of no confidence. It is the equivalent of the board of directors walking out on a CEO during an earnings call. And if that happened at a major corporation, the stock price would crash within seconds. Here, the corporation is the United States, and the implications are far more dangerous than a dip in the S&P 500. To understand why this matters, we have to look at the background and the buildup that got us here. This did not happen in a vacuum. For months, we have seen an escalation in the tension between the executive branch and the legislative branch. But this tension is not just about mean tweets or rude behavior. It is about the allocation of resources and the stability of the system. The modern capitalist economy requires a predictable government. Businesses need to know what the tax rates will be. Lenders need to know that the national debt will be serviced. Workers need to know that labor laws will be enforced. What we have seen over the last few years, and specifically in the lead-up to this walkout, is a degradation of that predictability. The president has increasingly tried to govern by decree, bypassing the messy work of legislation to impose his will directly. For a while, the Senate tolerated this because it often served their interests. Deregulation and tax cuts were welcome regardless of how they were achieved. But we have reached a tipping point. The volatility of the president's decision-making has moved from being a profitable disruption to a systemic risk. The walkout today was the system trying to correct itself, albeit in the most dramatic way possible. It was the political class signaling that the cost of doing business with this administration has finally exceeded the benefits. But why should you care about a bunch of wealthy politicians walking out of a room? It is a fair question. You might think that this is just elites fighting elites. And in many ways, you are right. But the fallout from this fight lands on your doorstep. When the government is paralyzed, real economic consequences follow. Think about the federal budget. Think about the debt ceiling. Think about the funding for the programs that keep your local schools running or your roads paved. All of those things require the president and Congress to be in the same room, literally and metaphorically, when they cannot even look at each other. The basic maintenance of the country stops. We are looking at the potential for government shutdowns, for credit downgrades, and for a freeze in the kind of federal spending that supports millions of jobs. If you are a federal contractor, a government employee, or just someone whose business relies on regular people having money to spend, this dysfunction is a direct threat to your income. The empty chairs represent a vacuum of leadership. And in economics, vacuums are filled by chaos. We need to analyze the mechanics of this situation. How did it actually work? How did we get to a point where a coordinated walkout was even possible? This requires understanding the power dynamics within the Senate itself. Senators are not just individuals acting on their own conscience. They are representatives of massive interest groups. They answer to donors, to corporate lobbyists, and to party machines. For a Republican senator to walk out on a Republican president, they need cover. They need to know that their donors are okay with it. This tells us something crucial about the shifting alliances in the ruling class. It suggests that major capital interests, the big banks, the energy companies, the defense contractors, have likely signaled that they are tired of the instability. They would rather have a humiliated president and a reset of the political board than continue with the unpredictable chaos that has defined this term. The senators who walked out were likely acting on a green light from the people who fund their campaigns. They calculated that sticking with the president was now a liability, not an asset. This is a cold, rational calculation disguised as a moral stand. They did not leave because they suddenly developed a conscience. They left because the return on investment for supporting this presidency has turned negative. You have to look at the key actors here beyond just the president. The Senate Majority Leader and the Minority Leader clearly communicated beforehand. This level of coordination suggests a deep systemic fear that the current path was unsustainable. They are trying to reassert the power of the legislature in the American system. Congress is supposed to control the purse strings. They control the money. Over the last few decades, they have ceded more and more of that power to the president, allowing the executive branch to run wars and trade policies without much oversight. Now that the executive is acting in ways that threaten the stability of the system, Congress is trying to claw that power back. The walkout was a physical manifestation of that struggle. It was a way of saying that the president cannot govern without them. But by doing it in such a public, humiliating way, they have also humiliated the office itself. They have weakened the institution of the presidency in the eyes of the world. And that brings us to the wider consequences. This is where we zoom out. This story matters beyond the Beltway. It matters because the United States is the anchor of the global financial system. The dollar is the world reserve currency. That privilege is based on the assumption that the U.S. government is stable, rational, and capable of paying its bills. When the world sees the American government disintegrating into theatrical protest and empty chambers, that trust erodes. If global investors lose faith in U.S. stability, interest rates go up. When interest rates go up, your mortgage gets more expensive. Your car loan gets more expensive. The cost of borrowing for the small business down the street goes up, which means they hire fewer people or maybe even lay people off. The theatrics in the Senate chamber translate directly into tighter financial conditions for working families. You end up paying a premium for their political dysfunction. This is the hidden tax of instability. It is not a line item on your pay-up, but it is real, and it is extracted from you every time the system fails to function normally. And that brings us to the question of confidence. Markets run on confidence, but so does democracy. When you see the Senate empty out, you are watching the physical erosion of democratic legitimacy. If the elected representatives refuse to even hear the head of state, they are effectively saying that the mechanism for dialogue is broken. In a functioning democracy, you listen, you debate, and then you vote. In a failing one, you perform stunts. This walkout was a stunt. A powerful one, yes, but a stunt nonetheless. And when politics becomes nothing but stunts, the boring, necessary work of governing gets neglected. While the cameras were focused on the empty chairs, I want you to ask yourself what was not happening. No bills were being negotiated. No budgets were being reconciled. The gears of government had ground to a halt so that everyone could participate in a moment of high drama. This paralysis has a compounding effect. Every day that the government spends in a state of performative dysfunction is a day that critical infrastructure projects get delayed, that regulatory updates are stalled, and that the long-term planning required for a healthy economy is pushed aside. We are trading our future for a few minutes of viral video clips. Now, I want to talk about the human impact of this because it is easy to forget the real people involved when we are focused on the titans of Washington. There are thousands of people whose livelihoods depend on the government actually functioning. I am not just talking about the senators with their comfortable pensions. I am talking about the support staff, the janitors, the cafeteria workers in the Capitol complex, and the millions of federal employees across the country. When the relationship between the president and Congress collapses this completely, the specter of a government shutdown looms large. We have seen this movie before. When the tantrums start at the top, the paychecks stop at the bottom. Think about the federal contractor in a rural state who is waiting on a permit to start a construction job. That permit does not get processed when the agency heads are frozen in political limbo. Think about the family relying on food assistance programs that require annual reauthorization. Their security is being used as a bargaining chip in a game of ego. The senators who walked out will go home to nice dinners. The president will go back to his private club. But the uncertainty they created ripples out to kitchen tables in Ohio, in Georgia, in Nevada. It creates a baseline of anxiety that makes it harder for regular people to plan their lives. You cannot take out a loan for a new business if you are worried the economy is about to drive off a cliff, because the people in charge cannot stand to be in the same room. We also need to look at what this says about the corporate sector's role in this crisis. I mentioned earlier that these senators likely had the blessing of their donors. This reveals a dangerous pivot in the strategy of American capital for a long time. Business wanted stability, they wanted a steady hand. But recently, we have seen a shift where chaos is priced in or even monetized. The media networks, which are massive corporations themselves, are profiting immensely from this walkout. The ratings for the clip of the empty chamber are astronomical. The outrage machine is a multi-billion-dollar industry, and today was a banner day for profits. This creates a perverse incentive structure. If the political system is rewarded financially for being dysfunctional, it will continue to be dysfunctional. The media companies, the social media platforms, and the fundraising consultants all make more money when the country is angry and divided than when it is boring and functional. We have built an economy that feeds on political failure. The walkout was not just a protest. It was a content drop. It was produced, packaged, and distributed for maximum engagement. And in the attention economy, engagement is currency. You are the product being sold in this transaction. Your anger, your fear, and your attention are being harvested by the very institutions that claim to be informing you. This leads us to a deeper system-level reflection. What we are witnessing is the latest stage symptom of a political system that has been hollowed out by money. When you strip away the civic duty and the patriotism, what is left is a transaction. The president is a transactional figure viewing his office as a branding exercise. The senators are transactional figures viewing their seats as fundraising vehicles. When those transactions no longer align, the relationship breaks. The walkout was the moment the contract was voided. It reveals that our institutions are not held together by shared values anymore, but by temporary alignments of interest. When those interests diverge, the facade crumbles. This is characteristic of what economists call institutional decay. It is not something that happens overnight. It is like termites in the foundation of a house. You do not see the damage for years until one day someone slams a door and the whole wall falls down. Today, the Senate slammed the door. We are now staring at the rot in the wall. It is crucial to understand that this is not just about one man. Donald Trump is a catalyst. Certainly, he accelerates the decay. His behavior violates norms that held the system together for centuries. But he did not create the rot. The rot was there when Congress stopped passing regular budgets and started governing by continuing resolutions. The rot was there when the filibuster was weaponized to stop any meaningful legislation. The rot was there when the Supreme Court allowed unlimited dark money to flood the political process. Trump just walked into a building that was already structurally unsound and started jumping up and down. The senators walking out on him is a reaction to the noise, but it does not fix the foundation. In fact, it might weaken it further. By abandoning the chamber, they have set a new precedent. What happens the next time a president from the other party speaks? Do the Republicans walk out on a Democrat? Do we end up with two separate governments effectively who never speak to each other? This is the path to total institutional paralysis. And in a globalized capitalist economy, a paralyzed government is a death sentence for competitiveness. China is not walking out on its leadership. The European Union, for all its faults, is still passing laws. If the United States cannot govern itself, capital will eventually flee to places that can. We are risking our status as the safe harbor for global investment. And once that is gone, the standard of living for the average American will drop significantly. I want to circle back to the image of the empty chairs, because it is such a potent symbol in economics. We talk about opportunity cost. The cost of doing one thing is the value of the thing you did not do. The opportunity cost of this political theater is the governance we are not getting. Every hour spent analyzing the optics of the walkout is an hour not spent fixing the healthcare system. It is an hour not spent addressing the housing crisis. It is an hour not spent dealing with climate change. We have a finite amount of political capital and public attention, and we are squandering it on spectacle. The emptiness of the room mirrors the emptiness of our current political discourse. It is a vacuum where policy should be, and nature abhors a vacuum if the legitimate government does not fill that space with solutions to your problems. Something else will historically, that something else is authoritarianism or civil unrest. When the polite mechanisms of democracy, like speeches and debates, fail, people turn to impolite mechanisms to get what they need. The senators might feel like they struck a blow for democracy today by shunning a demagogue, but by shutting down communication, they may have inadvertently accelerated the very breakdown they claim to be fighting. This brings up the issue of accountability. Who is actually accountable for this mess? In a corporation, if the management team walked out on the CEO, the shareholders would fire them all. But in our system, the lines of accountability are blurred by gerrymandering and polarization. Most of the senators who walked out are in safe seats. They will not lose their jobs over this. In fact, they will likely raise more money because of it. The incentives are misaligned. They are rewarded for performative resistance, not for constructive governance. And the president, for his part, uses the walkout to feed his narrative of victimhood. He will tell his supporters that the swamp is afraid of him, that they had to leave, because they could not handle the truth. He turns his humiliation into a weapon. Both sides retreat to their corners, stronger in their own bubbles, but weaker as a collective governing body. The loser in this scenario is the country as a whole. It is you. You are stuck with a government that is more interested in fighting itself than in fighting for you. Let us dig a little deeper into the mechanics of the walkout as a political tactic. It is the ultimate withdrawal of labor in a sense. But unlike a strike by workers, which is designed to force a negotiation for better conditions, this was a strike by the management class designed to end negotiation. It was a refusal to engage. In labor economics, a strike is a tool of last resort. Here, it felt like a tool of first resort for a group that had run out of ideas. It signals a bankruptcy of political imagination. They did not know how to counter the president's arguments, or they felt that countering them was pointless. So they simply removed themselves from the equation. It is a surrender of the intellectual battlefield, and while it might feel satisfying in the moment to turn your back on a bully, it leaves the bully alone with the microphone. And as we saw, the president kept talking. He spoke to the empty chairs, but the cameras were still rolling. His message still went out. The walkout did not silence him. It just removed the immediate opposition. It allowed him to speak without the visual reminder of checks and balances in a way. They gave him exactly what he wanted, a stage where he was the only actor. This isolation of the executive branch has profound implications for the machinery of international trade. And this is where the story shifts from a domestic political drama to a global economic threat. When foreign leaders and central bankers look at Washington and see a government that has physically fractured, they stop seeing a partner and start seeing a liability. I want you to think about this from the perspective of a trade negotiator in Tokyo or a finance minister in Berlin. They are looking at the United States and asking a very simple, very dangerous question. Is there anyone home? If the Senate walks out, who ratifies the treaties, who authorizes the funding for joint defense projects, who guarantees the stability of the supply chains that run through American ports? The answer is no longer clear. And in the world of global capital, lack of clarity is priced as risk. We are already hearing whispers from international markets about a political risk premium being attached to U.S. assets. This means that investors are starting to demand a higher return for holding American debt because they simply do not trust the political system to pay them back on time and without drama. And who pays that premium? You do. This is the part that usually gets buried in the financial pages, but it is critical to your daily life. When the risk premium on U.S. Treasury bonds goes up, the interest rates on everything else follow the mortgage rate. For that house you want to buy is pegged to the 10-year Treasury yield. The interest rate on your credit card is linked to the prime rate, which reacts to the cost of government borrowing. So when senators engage in a walkout that spooks the bond market, they are effectively reaching into your wallet and taking money out. They are making your debt more expensive to service. You might have cheered for the walkout because you despise the president, or you might have booed it because you support him. But the bond market does not care about your feelings. It cares about stability, and it just saw stability walk out the door. We are looking at a scenario where the cost of living already high due to corporate price gouging, and supply shocks is further inflated by the cost of political incompetence. This is the stupidity tax that we are all being forced to pay. There is another layer to this, one that touches on the very structure of our class system. While the political class plays these games, the wealthy have insulated themselves. I want you to look at who actually suffers when governance breaks down. It is not the billionaire donor class. They have diversified portfolios. They have assets in gold, in foreign currencies, in real estate across the globe. If the US dollar takes a hit because of this spectacle, their wealth is hedged. They have an exit strategy. But what about you? Your wealth, if you are lucky enough to have some, is likely tied up in your home or a 401k that is heavily exposed to the US market. Your income is in dollars. You do not have an escape hatch. When the Senate and the president turn the government into a reality television show, they are gambling with your chips, not theirs. This is the fundamental asymmetry of modern American capitalism. The risks of political dysfunction are socialized, spread out among millions of workers and retirees, while the benefits of the power struggles are privatized by the political and media elites who use the chaos to raise their profiles. Let us dig into the specific institutional damage regarding the budget. The Senate's walkout signals a complete breakdown in the appropriations process. We are heading toward a fiscal cliff without a functioning relationship between the White House and the Senate. Passing a budget is impossible. We are looking at a future of governance by crisis. This means continuing resolutions that freeze spending at previous levels regardless of current needs. It means no new money for crumbling bridges, no adjustments for inflation and Social Security, no resources to fight new pandemics or emergencies. It is a state of zombie governance. The lights are on, but the brain is dead. For a small business owner waiting for a federal grant or a researcher waiting for funding, this is a disaster. The uncertainty freezes decision-making. Businesses do not hire when they do not know if the government will be open next month. They hoard cash. They pause investment. This slows down the velocity of money in the economy, which drags down growth. The walkout might have lasted only 20 minutes, but the chill it sent through the economy could last for quarters.